You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen. His website is thegoldandoilguy.com. Welcome to the show, Chris.
Thanks for having me, Jim.
The Canadian dollar has been gaining value. It dropped down to 68 cents. It's almost 75. What's the reason for that?
Well, we've seen the U.S. dollar. It's really kind of lagged in terms of performance. It's starting to stall out, and that's somewhat helping. But the real key with the loonie, the Canadian dollar, is crude oil. If you were to put the loonie and crude oil together, they move in unison. And of course, we've had a really strong move up the last several weeks here in crude oil. We've come from $26.50 a barrel all the way up to $34.50 per barrel. That's a massive move to the upside. And the strength of crude oil is what's moving the loonie. I expect, I've got a lot of different types of analysis pointing to much higher prices for crude oil going forward, and I think we're going to see the Canadian dollar continue to add value, potentially another 5 or 10 cents in the relatively near future. So in terms of catching up with the U.S. dollar. So I think we're going to see, a real kind of turnaround, which will be, kind of a head turner for a lot of traders. I don't think people are expecting the Canadian dollar to rip to the upside, but I think there is potential here for it to have a significant move, especially if we see the U.S. dollar index itself start to break down, because once that starts to break down, which it's in a fairly bearish pattern right now, trading at resistance, that's going to help fuel the strength in the loonie.
What would move the U.S. dollar down?
Nobody really knows what moves most things. It's just all sentiment-based, but really it's there's a lot of concern about the Fed coming out with some type of quantitative easing, QE4 in some masked form. Of course, if something like that happens, it could hurt the U.S. dollar and see that fall. But the price action itself for the U.S. dollar is very bearish. It's been consolidating in a long-term sideways pattern. But more recently, since pretty much November of last year, we've seen a much more bearish type of tone and price patterns in the market. We're seeing strong waves of selling, very weak buying, and every time the U.S. dollar index kind of drifts up into a resistance zone, it just gets stepped on with lots of selling. So I think there's a lot of people starting to have more of a negative tone on the U.S. dollar index, and I think there's potential for something to trigger a massive sell-off in the U.S. dollar index, and that, I think, is going to be one of the key things that's going to start to drive precious metals and miners and silver through the roof over the next 2 or 3 months. Something big is going to trigger, and I think we're going to see the U.S. dollar break below this critical topping pattern. Right now it's starting to look a little bit like a topping pattern. If it breaks below this level, it's going to be lights out for the U.S. dollar index, and we're going to see commodities start their new bull market.
I hear Brits are starting to buy a lot of gold because they're worried the referendum might force Britain out of the European Union.
Yeah, I haven't heard really a whole lot about that, but, watching the inflows for gold, how much gold has been bought in the last month or so. I think it's finally reached levels that we saw back in 2009 when the last gold bull market started. So, we're starting to see some pretty big money move into metals. You can feel the sentiment starting to change. You can feel there's support in that market. I really do feel as though gold has got a bottom in. We could come in and test for a double bottom over the next month or two, which a lot of people I don't think are expecting, which is one of the reasons why I expect it, is because I've got several different time cycles topping out as of today, and we're starting to see some big selling step in. And the market always has a way of shaking everyone out. And right now, everyone is bullish metals. And I think we could see, a nice bout of selling, see it pull back for a month or so. And then I think we'll be off to the races with the first major leg to the upside for gold, silver, and miners.
What's going to have the best growth, silver or gold?
Well, silver in terms of percentage basis is definitely moves more than gold. There's a lot more, I think, upside potential for silver. With that being said, it's a lot tougher to trade. It's a lot more volatile. It whips around on a day-to-day basis in a very large percentage move. So you really got to, be able to manage position sizes better. Ideally you want a mix of both. I think gold is the better kind of more consistent safe haven play. Silver's a little more speculative, and of course miners are even more on the speculative side. But I think you really just need a mix of each. I don't think you should ever load the boat with one. I think you should have a nice blend of them all, because you really never know which one is going to take off. And touching on that topic, there's an ETF called GLTR. That's the symbol, GLTR, and it's a physical precious metals fund, and it holds platinum, palladium, gold, and silver, a nice mix of them. And because you never know, we never hear anything about those anymore. They've been out of favor, those platinums and palladium, and they've been selling off. They've pulled back substantially from the highs and really underperforming gold and silver. But it's the ones you never hear about that have fallen off the radar, the ones that can post some of the biggest gains and catch everyone off guard. So everybody's all excited about gold and silver. Well, there's other precious metals, and why not have a basket, at least one position that's holding this little basket ETF, in case one of those things skyrockets in value. They are precious metals. They typically move together, so why not have some of those in your portfolio long term?
Gold miners still a good bet?
I like gold miners. I like gold miners a lot. They're actually the more exciting of the play that's out there long term looking forward. I like miners way more than gold and silver itself. But looking at the short term analysis, yesterday and today I have multiple time cycles topping out for miners, and I actually sent out an update last night saying it looks like we're going to see gold in miners have a little bit of a pop today, and we've got several cycles topping out, and we're probably going to see some big selling, and we could see the start of a multi-week, if not a month-long correction in miners, and it's going to buck a lot of the bulls off the market. And that's exactly what we're seeing today. We're seeing the GDX down almost 4.25%. Silver's down 4%, or silver miners are down. So we're seeing a huge pullback from this level in this topping phase, and I think it's going to continue. I think this is the early sign of, or the beginning of a correction that's going to last quite a bit. I think this big run that we've seen in miners, really from pretty much halfway through January here, I think we're going to see half of that, given back. GDX kind of topped out at 1980 there, and I think it's got potential to go all the way down, potentially test the 16 level. So there's a lot of downside still, percentage-based move, and it could go a lot further than that. So overall, bullish on miners long term, but right now I think it's overdone. The patterns for all the different miner stocks are very bearish short term.
If you did buy gold miners, you should have patience then. Don't just dump it.
Yeah, if you're an intermediate long-term investor going to be holding 6, 10, 12 months or longer, I think it's a great play. I've owned some miners in precious metals for 6 months or so, and I'm just sitting on them, and I really don't care what they do, because I believe long term they're going to do really well, and that's just in my long-term kind of boring set it and forget it strategy. I want to have 5 to 8% of my portfolio in precious metals, mixed precious metals, and so that's what I'm positioned. I feel as though most of the downside is done, and I'm long with one of my portfolios, and I'm going to let it do its thing. I think there's huge upside in all of them. You just need to be patient.
And have they sorted out the weak sisters in the precious metal trade?
A lot of the weak stocks are, they're falling off the radar. They're going bankrupt. The market's still cleansing itself, and I think we're going to see the market continue to, or eventually here, continue to move up in the next few weeks after we have this correction. And even though we're going to see prices moving up, I think we're still going to continue to see some of these weak stocks that have been underperforming and struggling financially. Even though I think the indexes are bottomed and we're heading higher long term, I think we're still going to see a lot of these companies fall off the radar, being delisted and going bankrupt, just because a lot of them are beyond the point of being able to continue to keep trading.
We'll have more with Chris Vermeulen right after the break.
Unbelievable harmony, spectacular performance, the ultimate tribute to the Everly Brothers and Simon & Garfunkel. Bird Dog and the Vintage Electric Band coming to Fort Langley, Mission, White Rock, West Vancouver. Buy online and save at ontourtickets.com.
Welcome back. We're speaking to the gold and oil guy, Chris Vermeulen. Chris, what is going to happen with crude oil?
Crude oil has had a really nice move recently. We've we came down in pretty much mid-January for a real oversold market condition. I had the 2650 level marked on the chart from about 2 months prior, and this level that the crude oil came down to, it tagged it within about 25 cents. This was a Fibonacci extension price target. Price hit it, and then we saw a massive bounce from 2650 all the way up to almost $35 a barrel. And since then we've pulled back, because what that first bounce was simply an oversold technical bounce. And you and I talked about this a few shows ago. And since then we've seen that kind of reaction bounce kind of fizzle out. We've seen crude oil test those lows once again, and this time they've had a nice steady move higher. We're seeing constant buying. We're seeing a nice steady stream. We're not seeing extreme volatility. We're actually seeing a steady stream of buying move into crude oil. And right now, crude oil is trading at a resistance zone from the previous high it made back in late January, early February. Also, there was a low that we saw back in December. So it's right at this critical pivot point that's acting as resistance. And it's been trading here for 3 days. We've also got the 20-day moving average right at that level, so it's stuck under these key technical levels that short-term traders watch and trade off of. Now, I do feel as though we're going to see crude oil continue to struggle here for potentially another week or so, another 5 or 6 trading sessions. But overall, my cycle analysis is showing that we've got an upward bias, and we're going to probably continue to see this work itself higher over the next month. And I think we could see $40 a barrel, somewhere between $38 and $40 a barrel sometime this month, and trade up there for quite some time.
Will driving season start early this year because winter's been relatively mild for most of North America?
Yeah, for sure. It's unbelievable how little snow we've had in the mild days. It's not just like +1, +2 where I am here. It's +8, +10, +16. It's wild how beautiful it is. And of course it makes for great road trips, driving conditions, and I think spring is right around the corner much earlier than normal. So I think we're going to see a feeding frenzy. We're going to see a lot of gas being consumed, a lot of driving, and it's going to definitely help crude oil. But again, the energy sector is just so weak. There's so much supply of oil, so much supply of natural gas. Everything's in favor for it to be, for it to be hot, a good season for that stuff to be used, but there's just so much supply. It's going to take a while, I think, to soak it up.
Well, I've been told they're so desperate for storage space for crude, they're keeping it in railway tanker cars. The cars are just sitting there; they're not moving.
Yeah, I know. Everybody's out of space, and they don't want to give it away. Even though I think there are some people almost giving it away because they can't store it and they need to keep it moving. So it's a real struggle, and I think this is one of the reasons I think we're going to see crude oil and crude oil, I think more so, underperform and really kind of trade down in this range below, below 50 level. I think it's going to trade for a long time, but we could see crude oil continue to flounder down at these levels. It's trading at resistance right now. It could trade sideways here for several more months and right now it's got a double bottom. It could come all the way back down to a triple bottom. It could flounder down here for a while. And that's the problem with the energy stocks is if energies flounder down here, even if crude oil does break and run all the way up to the $50 per barrel mark, most of the companies can't produce oil profits at $50 a barrel, and that's a huge move from where we are right now at 35. So even if crude oil has a massive rally all the way up to 50, companies are still losing money every barrel they pump, and their financials are going to continue to erode and weaken. They're not going to be able to service their debts, and the financial stock or the energy stocks are going to continue to be under serious pressure. So I am not interested really in the energy stocks myself. I would rather be looking at the commodity ETFs because I think they've got some nice movement ahead of them, and you don't have to worry about the financials that companies are struggling with.
What commodities are you hot on?
Well, I like crude oil. It's been moving very cleanly in technical kind of formations and timing. So we're seeing nice clean bounces off measured moves, support and resistance levels. It's very clean. Same with natural gas. Natural gas has been moving really nice. And gold and miners, all those things, the precious metals, they're actually moving in a really nice way. Right now, just everything is at a tipping point. It looks like we're going to see a little bit of weakness in commodities, and that's going to last a couple weeks. And then I think we're going to see a really great buying opportunity in crude oil, natural gas, and the precious metals in general.
I think the continued automobile sales through the holiday season, that usually at the end of December they stop, but they're continuing. The auto sector is doing very well. That means people plan to be driving, and there's nothing like a new set of wheels to set you out on the road.
Yeah. It seems like a lot of people are buying new cars. I just, a lot of these companies are giving cars away so cheap. You drive around, everybody's got $5,000 off, $7,000 off, $12,000 off a truck. It's, you kind of wonder how much they were, taking off people before, if they can give that kind of money back now. So, but overall, I think with financing being 0% or 1% financing, that really inflates the car market, just like it does like the housing market. When rates are low, people can go out and buy multiple houses for rentals. They can buy a bigger house they can't really afford if rates double or triple. And they do the same with cars. I can go buy this brand new vehicle, get rid of this junker for a couple grand, and it'll cost me almost nothing. So I think the 0% financing, low rates, and people maybe thinking that rates might start going up, which the Fed obviously has started, has got people potentially kind of moving quicker into getting their cars and locking in financing. So I think the whole 0% and the financing deal could be really just inflating really what's happening. I don't think the economy is nearly as strong as what most people think, and I think things are very, very close to unwinding, and people are realizing that they're over debt in so many different ways, and they're going, there's going to be start to have some debt repayment issues.
Well, one of the latest surveys in Canada said that no longer are people worried about the environment; they're worried about jobs. Yeah,
exactly. Yeah, I met with a guy this morning. We were talking about real estate in Toronto and my area here, and it's interesting because the housing market is a feeding frenzy. A house comes up, it's like multiple offers, same day or next day, and it's sold. It's gone. Everything's selling way over asking price. It's just insane. And we were talking about the jobs. There's a lack of jobs in our town. There's very few jobs, and the jobs that are there, I'm in a service town, and I'll tell you, they're minimum wage jobs, yet the houses have exploded in value. They're all up 30-40% in the last couple of years. It's insane. And it's amazing how many people are just going out there and buying stuff when there isn't a huge supporting like jobs for everyone. And we kind of came to the conclusion that it seems like all the people buying right now are all the people who have been saving money and been diligent and who have a lot of money, and they're realizing that, real estate is one of the better investments right now. It's a solid asset. It appreciates, really well in most years, and, you can, if it's a rental property, you can generate even more income. So it seems like the people who have money and good jobs are the ones kind of forcing this big play in real estate, and it's kind of masking everyone else who's unemployed or have minimum paying jobs, because there are a ton of people out there just scraping by.
And I hear the Bank of Mom and Dad is doing really good business. A friend of mine, his parents said, look, we'll give you your inheritance now while money is cheap and you can still afford to buy a condo in Vancouver. So that's what they did. And people are doing that more and more often.
Yeah, other than the real estate's through the roof, right? Everything that, there's going to be soft periods. I don't think real estate can keep going up and be this kind of crazy for a whole lot. I know real estate markets can last, bubbles can last years and years and go, they're very unpredictable, but overall, people just can't afford houses anymore, and things are eventually going to come back down and deflate. Maybe not all the way to where they were a few years ago, but we're definitely going to see prices kind of fizzle out once this wave of money and excitement starts to, when this wave of people who see this as an opportunity start running out of money for them to keep purchasing more properties and moving and upgrading. This will eventually fizzle out, just like every bubble does. Every housing market has waves of hot spells and cold spells, same with the stock market. So things, I think, are going to fizzle out, and I think we're going to start to see it over the next 1 to 2 years. Things are going to get softer, and then things could get really soft in 3 or 4 years from now, and it'll be a great opportunity, I think, for long-term real estate again. But I think right now it's a feeding frenzy. It's really tough to get into real estate.
And probably not a good idea when shacks in Vancouver are going for $4 million.
Yeah, exactly.
Why do you think, is this a self-feeding thing? Because it's just like when the stock market's at its very peak, that's when people go, oh my God, look at the stock market, I better jump in. Is real estate in Toronto and Vancouver the same deal? People are going, oh my God, if it was $4 million today, it'll be $5 million tomorrow.
Yeah, I totally believe that's what's going on. You can, in my town, it's the exact same thing. It's a feeding frenzy. They have FOMO, fear of missing out, and they want to get involved. They want to sell their house. If their neighbors just sold their friends sold their house for a ridiculous amount, they're putting it up for sale. Or people are trying to buy that extra property. Like, people just don't want to miss out. They don't want to see everyone around them benefiting from these, buying a new property and feeling all excited, or selling a property for ridiculous profits from when they bought it 5 or 6 years ago. So it's insane. I have a friend, they bought a house last year. They put it on the market. They made $100,000 on this, very affordable house, only about a $300,000 house. They made $100,000 on it in 1 year. Our little town is just exploded, and all of our friends in the area, everybody's talking and chattering about real estate. Everyone's looking at all the listings. You mention real estate, and everybody's like, oh, I saw that house. Oh, I went through that house. Oh yeah, it's sold. It's just insane. So that's where we are. We're at feeding frenzy. Everybody has fear of missing out on the real estate bubble. They don't want everybody else to make money, and they don't. They'll feel left out. So, this will fizzle out.
Yes, in feeding frenzies, sharks start eating their own tails.
Yeah, exactly.
They get so excited. Chris, thanks a lot for chatting with us.
Hey, always a pleasure, Jim.
My guest has been Chris Vermeulen. His website is thegoldenoilguy.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our popular YouTube channel is Talk Digital Network. And you can send any questions or comments about the show to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.